Hey everybody, Smart Silver Stacker here. Today is Wednesday, December 14th, 2022. Kind of a big day for markets. We're going to hear from the Federal Reserve as they wrap up their two-day FOMC meeting. They're going to make an announcement as to what they're going to do with interest rates moving forward. Now, I am forecasting a 50 basis point rate hike from the Fed. That's what markets are expecting. Fed likes to give markets what they're expecting, and yesterday's cooler than expected inflation data for November, I believe that's going to give them the leeway to transition to this soft pivot of sorts. We're going to hear a lot about how inflation is cooling off and how, the Fed is being successful in their fight. Who knows? Maybe they'll throw some hawkish jawboning in there too. Maybe markets won't like it. But all of this is really just a bunch of theater, if you ask me. And ultimately, the Fed's objective with these rate hikes, their stated objective is to fight inflation. And I think these rate hikes might do a lot of things to the economy, but fighting inflation is not going to be amongst them. And in today's video, I want to get into some of the reasons why the Fed is simply incapable of bringing inflation under control and why it's going to be going much higher. So let's get to it. Thanks for tuning into today's video, everybody. If you enjoy it and you get some value from it, please do give it a big thumbs up down below. And today's video is brought to you by silverbotanicals.com, household and personal hygiene products that utilize the power of nano silver. Check them out with the link down in the description. And don't forget to use coupon code STACKER to save 10% on your order. All right, so why is it that the Fed is not going to be able to fight inflation? What makes them incapable of winning this fight? Well, a lot of it has to do with the levels of debt that we have at the moment and the level of government spending, the fiscal policy of the U.S. government. I mean, the politicians are not doing the Feds any favor in their inflation fight by spending hundreds of billions of dollars that they don't have. Last month, the federal budget deficit, $249 billion in 1 month. And when you have spending like this and when you have levels of debt this high, there is simply no way that the Federal Reserve can raise rates to a sufficient level to meaningfully fight this inflation. Just like what Paul Volcker had to do back in 1979. So in 79, we had high inflation, probably around the levels that we have now. Now, the CPI was higher back then, but that's because the CPI was measured differently. And if you apply the same formula to today, you'd probably have inflation in the double digits. But Volcker had to raise rates to almost 20% in order to bring that inflation down. And they had to remain elevated for some time before inflation started to ease. And today, with the levels of debt that we have, $31.4 trillion, more than a 120% debt to GDP ratio. It's about 4 times the debt to GDP, I think, that we had back when Volcker was hiking rates. So, 4 times as much indebtedness relative to the size of the economy. There's no way that you can raise rates that much, because if the Federal Reserve were to actually aggressively raise rates to the levels that they needed to, because, they might be hiking rates now, and it might be at the fastest pace in decades, but they're still historically low. Comparing today's rate hikes to what we've had over the past 20 years is like comparing it to, this incredibly easy monetary policy environment where the Fed was trying to, inflate asset bubbles, create the wealth effect, and gosh, they did a good job. A lot of people made a lot of money off of those asset bubbles, like tech stocks and Bitcoin. But, now that the rates are going back up, even though they're not really going up that much, there's been a lot of pain. A lot of people have lost money now on those tech stocks and on that cryptocurrency. And these rate hikes, like I said, they're not going to do nothing. They are going to hurt the economy, but they are not going to be capable of fighting inflation. And that is why inflation is continuing to move up, because, we're hearing a lot about this softer or cooler than expected inflation from last month, but I don't know about you, 7.1% year-over-year inflation still seems pretty high to me. And I think anybody out there who, goes shopping at the grocery store, or who buys fuel for their car, or who's got to buy school supplies or clothing for their children, they know prices are not coming down anytime soon. And all of this inflation is cumulative. That's something important to keep in mind. So even if we have this disinflation situation now that they keep talking about, where the rate of inflation is still moving up, but it's moving up slower, so everything's fine. No, it's moving up from a very elevated level already. And so, this is squeezing the heck out of consumers, out of the middle class, or what, formerly was the middle class, and now is just a big group of people struggling to get by. And we're seeing the economy continue to deteriorate. One thing that we saw with this inflation data that came out is, real wages are dropping. Now, I think in November they actually ticked up slightly, but year over year, real wages are down 1.5%. How are consumers making up the difference? Well, they're borrowing. That's why we have record high credit card debt right now. Interest rates on that credit card debt now are hitting record highs as well. And so all of this is a very ominous portent for the economy. And the fact that we still have inflation moving up, it did move up in November, maybe slower than analysts expected, but it moved up 0.1%. And yet the Fed now is probably going to transition to this soft pivot, and they're going to start getting a little easier with the monetary policy. It shows that they're not in it to win it. There's no way that they can fight inflation with this kind of policy. But what they are doing, I believe, is they're getting some ammunition for when they do have to intervene again in the economy, which is going to be pretty soon. It's very difficult to ease policy when you have interest rates at 0%. So all this year, every time they've made one of these 75 basis point rate hikes, it hasn't done much to fight inflation, but what it has done is it has given the Fed some ammunition for the next round of easing, which is coming very soon. Now, when I see all of this, I see 7.1% year over year inflation, and politicians and central bankers are talking about this like it's good news. And even market participants seem to think, oh, good, the Fed can start printing money nonstop now. The whole rationale behind the jump in markets that we saw yesterday as the softer than expected inflation number came out, we saw silver spike up, we saw gold move up, crude oil, all the major stock indexes moved up. The whole rationale is, well, inflation is easing, it's coming down, it's going up at a slower pace, and that's going to give the Fed the ability to print more money, and so there's going to be a lot more inflation. That is basically the rationale, and that is so crazy, and it's so indicative of a broken market, and it also shows that even markets on some level understand that inflation isn't going anywhere, and I think when they really come to that final realization, when that really begins to dawn on investors, and the Federal Reserve is no longer able to jawbone inflation expectations lower, that is when gold and silver are really going to take off, and commodities across the board. Now, if you want to get some gold and silver, I like ST Bullion. They're my preferred bullion dealer. None of this is financial advice, but I think that it is very important to be on the precious metals train before it leaves the station. So, regardless of what gold and silver do today, when the Fed makes their announcement, maybe they'll drop, maybe they'll go up, maybe they'll trade sideways for a while. They've been on a pretty good rip lately. I still think it's a good time to be getting out of dollars and into hard, tangible assets like gold and physical silver bullion, because ultimately inflation is here to stay. It's not going anywhere. We have got tremendous levels of government spending on welfare and entitlement programs here at home. We've got more than $100 trillion in unfunded liabilities for these programs. And then we're also spending a tremendous money on warfare. So it's welfare and warfare economy. We've got an $858 billion defense budget that just passed. And, it's not like the government has some deep coffers. They don't have a bunch of reserves to pay for all this stuff with. It's all going to be financed via the printing press. And that means inflation is going to continue to move up. It's not going anywhere, folks. Ultimately, the dollar, I believe, is toast. We're probably going to lose the world reserve status at some point in the relatively near future. Maybe within the next decade. If you read The Fourth Turning by Strauss and Howe, I mentioned that in yesterday's video. I had a few people in the comments ask about it. It's a book by these guys, Strauss and Howe, about generational theory. It's pretty interesting. I recommend you check it out. Their timing and their forecast for a book that was written back in the 90s have been pretty spot on. Very interesting stuff. They forecast that there'd be what they call a fourth turning event, or a major shakeup and change in society beginning in the year 2020. Seem to have nailed that one pretty well. And according to their theory, you get one of these events about every 80 years or so. And if you go back through history, that is borne out through the history of the U.S. 80 years ago or so, we had World War II. 80 years before that, you had the Civil War. 80 years before that, you had the Revolutionary War. And these fourth turning events often end with some kind of major calamitous conflict, and seems like that may well be the case, maybe where we're headed when you look at the news surrounding the conflict in Eastern Europe. You look at some of the potential conflicts in the South China Sea. A lot going on in the world, folks, and there's a lot of things that we're going to be spending a lot of money on, and we don't have much, and so it's all going to be printed into existence. Inflation is going to be a problem, and that's my forecast. Let me know what you think in the comments down below. Thanks for watching, everybody. Smart Silver Stacker out.